Welcome to the ETF Market Insights, your regular webinar series that focuses on the evolving world of ETF investing. Each Friday, a new panel of thought leaders aims to provide investment education and insights with the goal of helping you become an informed investor. Make sure to visit www.youtube.com/ETF Market Insights to watch previous episodes, and remember to hit subscribe so you receive a notification when we post new content. Thank you for joining us today. Let's get started.
This is ETF Market Insights. I'm Danielle Nuzzle from BMO Exchange Traded Funds. It's always great to have you join us every Friday at 1 o'clock, whether it's on GoToWebinar or on our YouTube channel or watching later on demand. We're so delighted to have everyone with us today. Before we start, a reminder to you all, we are not providing you any advice today. There will be no investment recommendations. That's not what we're about. We're all about providing you education and information on the markets, the economy, and of course, we like talking ETFs because we really want to empower DIY investors to have all the tools available to them to manage their own investments. Well, we have an all-star lineup ready to go today, and I have some special news. Today is my last show on ETF Market Insights for a little bit of time. I'm actually having a baby in a couple weeks. So we have Erin Allen, who is a VP at BMO ETFs, and Saad Rana, an associate at BMO ETFs, who'll be joining us today as experts, and you'll be seeing lots of them in the shows to come. They'll be guiding the conversations. They're both incredible ETF experts and colleagues of mine, and I'm so excited to have them on the show today and to be taking over the reins in the weeks to come. And a reminder to you all, we have a YouTube channel and all our episodes are posted there on demand for you to watch or replay. And of course, you can stream live on YouTube every Friday at 1 o'clock. Click subscribe and you'll be notified when we go live every Friday. Our 1-minute ETF update today, well, hot off the press are our flow numbers from National Bank. So this is the National Bank report. If you've joined us before, you are familiar with this report. We always like to give you the rundown because this is usually an institutional report that we have access to, but I think it's interesting for a DIY investor to see where money is flowing into ETFs and what investors are thinking. So one really important thing to kind of show is the Canadian ETF market actually grew by $1 billion in May. And we look at two different things when we look at flows. So we look at how much investors' money is going into ETFs, so new money. And then we also look at market movement. So market movement was actually negative in May, which means equity markets were down. However, there were much more flows into ETFs from investors. So we actually have $1 billion of new assets in ETFs, in Canadian listed ETFs in May. So interesting to see that. Now, today's show is all about your own due diligence checklist when you are looking at or researching ETFs for your portfolio. And remember, when you're adding ETFs to your portfolio, it's your own investments are unique to you, your objectives, your time horizon, your risk tolerance. So always keep that in mind when you're starting to do research on ETFs. And the Canadian ETF market has really exploded over the last few years. And there are so many more ETFs out there that it's so important investors are doing their research, they're doing their homework on these types of funds because there is a lot to sort through. So you're looking at more than 40 ETF providers in Canada, and that number is growing each and every month as we're seeing new providers come onto the scene. We had a record over 200 new ETFs, which were launched last year alone, and seeing more and more products come to market. And there's over 1,100 ETFs listed in Canada and trading in Canada. So certainly a lot for all you DIY investors at home to look at. So I hope you find today's episode really helpful in terms of how to sort through these products and figure out what's right for you and what's right for your portfolio. So when we're going to go through our checklist, we're calling it today, and there's a few things we're going to touch on. So One of the first things is identifying the right provider. So I mentioned there's over 40 different ETF providers out there. You want to make sure you understand that provider, how they're running they're managing their ETF team, the portfolio managers, the types of products they have in the market. You want to do that research. You'd like to understand things like the cost of the ETF. You really want to know the methodology of the ETF. We've talked about this on other shows. Always good to research this. And then there's other considerations like tax, liquidity, and even understanding ESG metrics or proxy voting and engagement coming from that ETF provider. So we're going to unpack a lot of this shortly in this show. So Saad, I am going to start with you. I thought we would start this conversation talking about the ETF provider. So there's, like I said, over 40 providers out there. Most of the assets are with the big three, BMO ETFs, Vanguard and iShares. What types of things should investors be looking at when they're researching different ETF providers?
Great, thanks Danielle, and thank you for that introduction. We'll definitely be missing you, and Erin and I will definitely do our justice and do as best as we can and fill those shoes that you have created. But to get into the presentation real quick here, so you're right, as you mentioned, we have more than 40 companies already, in Canada as ETF providers. And to help our investors with decisions, we have to make some points or look at some points to ask ourselves when we're doing our research. So for starters, some of the questions you may want to ask yourself is, what is the tenure of the firm and the team? How experienced is the firm in managing and launching ETFs? What kind of history and track record do they have in the industry? Now, this really gives a sure sense, of the capabilities and a sense of security within the firm one may be partnering up with. Now, another point to think about is, what is the firm's total assets under management? So also, AUM, and also the total ETF AUM. The reason for this is that the AUM signals a provider's stability in the ETF marketplace. And we can all agree that stability of the provider of the ETFs is it's crucial when exploring and looking to invest through their product shelf. Now, another question that one should look at is, does the firm provide local support and ongoing education? And this is a great point because it's important for investors. They need to establish and make sure that the providers that they're looking to partner up with can provide local support for their concerns and ongoing insights for best use of their products, and really to help get answers quickly if they have any. In addition, you'll also see that there are lots of, there's providers that will go beyond education of their products and really help investors educate themselves on ETFs and investing in general. Whether that may be webinars, podcasts, articles, and blogs and that kind of thing. So definitely look out for those kind of contents or media out there from these providers. And then finally, this leads us to our final point or question that you may want to ask yourself when researching for an ETF provider, which is, is the provider a leader in the industry? What ETFs does the product shelf include? So would that be broad-based ETFs or smart beta, fixed income? Do they have innovative solutions available for you to look through and invest through? A diverse product shelf really helps investors develop a relationship and increase their comfort with their provider. So to sum it up really quickly here, things to consider when looking for an ETF provider, you need to look at the tenure of the firm and the team, assets under management, level of support and education the provider provides you or has available, and the breadth of their product shelf.
Saad, I love that you mentioned the support and education part. I think this is really, really crucial, especially as we're sorting through all these ETFs that are listed out there. Investors want to be able to go to that ETF provider's website and have information on the strategies, on how the ETF is trading, have an opportunity to ask questions. And we have at ETF Market Insights, which is run by BMO ETFs, you can visit that site and always submit questions to us, and we will get back to you on those for any of our products. So I'm really glad that you highlighted that there. Now, Erin, I'm going to turn to you because, you know, Saad laid out some really good part of the checklist when picking your ETF provider. Once somebody has an ETF provider picked out or locked down, we're going to have to start sorting through all the different ETFs, and there's a lot to look at. So, Erin, what are some of the considerations investors should be paying attention to when analyzing different ETFs?
Yes, thanks, Danielle. And I also want to wish you all the best on your mat leave before I get into this. I think you're going to be the best mom ever. But yes, so there is a lot to consider when you're looking at which ETF to select. First and foremost, you have to be ensuring that the ETF strategy and objectives are in line with your investment objectives and goals. That's number one, and sort of pointing out the obvious. One thing to consider is the risk rating right off the bat. You can find this on the provider's website, and you know, this is important. If you're investing for a shorter time frame, or maybe you can't stomach any volatility in your portfolio, you want to make sure that you're considering a product with an appropriate risk level. You also want to consider the yield on the ETF and how that fits in with the level of income that you might require from your portfolio. You'll also want to look at what is the distribution frequency. So this might be important for those who are looking to receive that regular monthly cash flow from their ETFs. Some ETFs, of course, may only pay quarterly or annually, so just be aware of that as well. You also want to consider where the product is being held. So is it in a taxable non-registered account, or is it in a registered plan? And what are the tax implications for those ETFs that you plan to hold, you know, specifically in the non-registered accounts where it's more important? So certain ETFs are going to be more tax efficient than others. And again, you can see this on the ETF provider's website. You can see an actual tax breakdown of historical distributions. So you can look at what level of dividend, capital gains, interest, or return of capital that you'll be receiving from that product. Another consideration is whether you're looking for active or passive. So with active investing, this really requires you to have confidence in whoever that portfolio manager is, right? So you want to have a close look at their tenure as a portfolio manager, at their track record, because active management is really about beating the benchmark. So you want to make sure that portfolio manager is picking the right stocks, timing the market effectively. So the track record is really the big factor there. But for passive, you want to be examining the underlying index in great detail. So considering the track record and the reputation of that index provider is probably number one. But then you want to go deeper and you want to consider the weighting methodology, which I think Saad is going to get into, but different index weighting methodologies can give you a different risk return characteristics and overall a different outcome from your investment. And then I'd say lastly, it's really important to understand the ETF's exposures. So any concentrations that there might be within the portfolio, whether that be from a sector or a specific geography, or even a factor. And really just look at that to see how it aligns with the rest of your portfolio and if you're comfortable with that exposure.
So many great points there. I'm going to come back to the what you mentioned on underlying index. I think a lot of investors at home might forget this point. If an ETF is tracking an index, you can actually research, like Erin said, that index provider, whether, you know, for example, like an S&P or NASDAQ, and they actually provide fact sheets just like an ETF would have with a ton of information on them. And remember, if an ETF is new to the market in Canada, it can't publish performance for an entire year. But you can always look at that index and go to the index provider's website and do some extra research on that index, and you might get more information on its performance, how it's done over a longer period of time, its volatility. So it's another layer of due diligence, another layer of homework, but all of this is available online, so very easy for you to do at home. Now, Saad, we have this great example here. We're comparing low volatility ETFs. All of these are listed here in Canada. And I'd love it if you could talk us through this, because it really shows that all ETFs are built differently. Of course, these low volatility strategies, some are active. I don't know if some are tracking indexes, but you can see with the performance here, they're certainly built with different methodologies. Can you just talk us through this example here?
Thanks, Danielle. Yeah, no, definitely. And this goes back to saying we always need to look at what's under the hood, right? You need to see what the ETF may be built, how it may be built, what kind of methodology it's using. Like you mentioned, all of these ETFs seemingly look the same. They're all low volatility, but when you dive deeper or just looking at the performance, you see they can be vastly different. Now, it is important to look at the different index weighing methodologies that are available. This is important because, as we've already mentioned, it can lead to differences in performance and risk return characteristics amongst seemingly similar indices. Now, there are mainly two weighting methodologies for consideration. There's a market capitalization weighted, and equal weights methods. Now, just to kind of break it down between the two, market cap is based on the size of a company. So a larger company will have a higher rating. It provides more single stock exposure to the companies within the largest market caps. A consideration here is that this method can be concentrated in certain securities. And then in an equal weighting method, however, as the name implies, it equal weights all the companies on a dollar weighted basis. This approach is basically an effective strategy for reducing concentrated risk, especially for highly concentrated markets in sectors like Canada. It can also help mitigate individual security concentration and to properly diversify exposures, which helps against single stock risks as well. So really, you have to look at what is under the hood, what kind of weighting methodology is applied. As we said, with market cap, they can be a little bit more of concentration in certain securities, whereas with the equal weight approach, it diversifies your exposures, which helps against single stock risks and also leads to differences in performance as well.
Great, thanks, Saad. And when we're looking at this example in particular, we're looking at different low volatility ETFs. And actually, we made this comparison right from our BMO ETFs comparison tool that you can find on etfmarketinsights.com. So you have access to this tool as well at home. And as a low volatility strategy, you're probably also going to want to go to each of these providers' website and understand how are they defining low volatility. You might read that in a white paper or some report on the provider's websites, because we've talked about this in past episodes, that we don't all share the same views in terms of what makes a stock have low volatility. And then these indexes or these ETFs in particular are weighted sometimes in terms of just how much is that stock a low volatility stock versus others, and a blend of that and market cap. So there's a lot of different methodologies to look into. But again, the best ETF providers will always have this written down in a report on their website that's easily readable, easy to understand for investors at home. So I'm going to stick with you for a second. So ETF costs, we get lots of questions about this. I know we see things like management fee, MER, TER. Can you break this all down for us, and what should investors be looking at?
Yeah, no, definitely. Thanks, Danielle. So like you said, another crucial point to cover on our checklist is fees of the ETFs you're considering. Now, some key things that you need to ask yourself is, what is the ETF's total cost? For ongoing costs, investors should consider the management expense ratio, which is MER, the trading expense ratio, which is TER, and really understand if there's any withholding taxes applied to the portfolio or the ETF as well. Another thing to consider would be, what is the average bid/ask spread on the ETF? And for trading ETFs, a smaller spread indicates a lower cost to enter and exit their positions. How frequently an ETF buys and sells holdings can impact the overall trading costs as well. Now, also you would have to look at how closely does the ETF track its index or exposure. This is important because the ETF should aim to tightly track its index with minimal return differences to keep it consistent. And this kind of gives us this we can round out that overall, when you are investing in ETFs, costs such as MERs, CERs, and again, the bid and ask spreads can make a meaningful difference in your portfolio over a long period of time. And to illustrate this, we have two charts here right at the top of the slide. The first one on the left, basically, the assumption for the chart here is that they're both hypothetical. Again, they're not real portfolios, but for our viewers' benefit, the initial investment on the chart on the left is for 100,000 each. There's two portfolios, Portfolio A and Portfolio B. The annual rate of return is 6% with no distributions. This assumes, that the withdrawal of $40,000 per year beginning year 31, and the goal is of reaching $500,000 in 30 years. Portfolio A pays 0.5% less in fees each year. So that's the main difference between the two portfolios. Now, what you will notice is we can see on the first chart that Portfolio A exceeds their goal of 500,000 in 29 years, whereas Portfolio B, the one with the higher fee, barely scratches the goal in the year 31. Then going a little bit further, we see throughout the vested period of Portfolio A as, we have additional savings throughout the years in relation to Portfolio B. In fact, after 30 years, Portfolio A has $75,000 in additional savings. That's a significant and meaningful difference, right? Then lastly, we also see that on the second chart on the right-hand side, that during the deaccumulation phase of the portfolios, when they start paying out, Portfolio A also lasts over 10 years longer. Again, these charts are for illustrative purposes only, but they do cast an important light on being mindful of fees and costs of an ETF and investment that you're going into, as it can have a significant impact to your overall portfolio over time.
Thanks for walking us through that, Saad. The visual is so powerful in showing just how higher fees can erode costs. We talk about this all the time with ETFs. One of their greatest benefits is that cost efficiency. And maybe I'll just add, when you are comparing costs on ETFs, understand that something that tracks a kind of a broad-based index like an S&P 500 ETF, you can expect it to have a lower fee than an ETF with a more active strategy like a covered call ETF, where you're seeing that our portfolio managers have to do a lot more trading behind the scenes with the options and the equities. So keep that in mind when you're comparing fees amongst products as well. Now, Erin, I'm going to turn to you on this topic. We actually did an entire episode on ESG engagement and voting just over a month ago, but I think it is just so important to highlight as a consideration investors can be looking at when picking ETFs. What can you tell us about this kind of process for each different ETF provider, and maybe touch on how that an ETF that might not have a sustainable approach in its objective can still be behind the scenes being managed sustainably with engagement and voting from the provider?
Yeah, for sure. So research has really shown that investors are caring more and more about this, and that they're looking to align their investments with these values around sustainability. So it's one thing, if you're going to invest in an ESG product, but it's another thing to understand proxy voting and engagement and how those two can happen across all ETFs, not just ESG branded ETFs. So if this is important to you, definitely do some digging and see if the firm that you are looking to partner up with or looking to invest with is doing proxy voting and engagement across solutions. So maybe we could just back up and I'll quickly introduce what proxy voting and engagement are. So proxy voting first, shareholders of a company have the right to vote on certain aspects of the company's business. So an example of that would be the election of the company's directors, as an example. And equity ETFs that hold these shares of companies are actually entitled to exercise these proxy voting rights that are attached to all the underlying shares on behalf of the investor. So at BMO Global Asset Management, we exercise the voting rights across all securities held within our ETFs, so ESG branded or not, and all of our mutual funds as well. To add to that, we have a history of voting against management, a high percentage of the time. And this just really illustrates that we take a more active approach, which I think is something that we stand out with. We really try to drive change rather than just voting alongside management. So that's important. And then engagement is sort of taking it a step beyond that, where the fund provider is actually going to be meeting with and engaging with the companies that they hold to really try to further drive change on specific issues, whether they be environmental or governance related. And on the slide here, we're just showing, this is taken from our annual report. So we actually publish this every year and really have a lot of transparency in terms of what we're doing around proxy voting and engagement. So check it out. But anyways, on the slide here, we're showing that last year we had 144 companies that we engaged with. And we actually achieved almost 30 successful milestones last year, which really shows that this is working, it's paying off. And you can also see here, which I thought was interesting, is that our engagements are focused heavily around climate. So I'll just give you just an example. Suncor is a company that our engagement team has been really engaging with for over a decade now. They're lagging their peers in terms of a net zero target and commitments around climate. So our engagement team was really asking for them to enhance their strategy around decarbonization and around climate governance. And last year, we saw this prove successful, where Suncor announced a new strategy to grow its businesses in low-emitting fuels. They also released a 2050 net zero commitment, and they made investments towards different technologies that can help reduce emissions. So that's just one example out of many on how these engagements can really basically take your dollars and your proxy votes and drive change with that. So very powerful.
You know what's really interesting, Erin? We did a whole episode on this exact topic about I think 5 or 6 weeks ago, and it's on our YouTube channel if any one of our viewers wants to go and watch that. It actually was one of the most watched videos we posted this year, one of the most watched episodes. We had Rosa on from our responsible investment team to talk us through BMO's approach. So I think that speaks volumes when our viewers at home are reading more about this, wanting to get more information on ESG engagement and proxy voting. It is a huge consideration for investors going forward, and it's certainly something to look into when you're selecting ETFs. Now, Erin, I'm going to stick with you. One of our favorite things that you and I used to work on back in the day was the prospectus. So an ETF prospectus and ETF facts, they might not be the most glamorous of documents, but there's a lot of information in there. Can you just tell our audience what they can find in these regulatory documents?
Yeah, so these two documents are definitely a great place to start. They're all available on the fund providers' websites. They're regulatory or legal documents, so you'll always find those there. And really, fund facts are designed to sort of give you a snapshot of the product. So it's going to have a lot of the information that we just walked you through that can help you make an informed decision about your investment. So it'll have the ETF's holdings, it'll have the risk rating, past performance, as well as costs associated with owning it. One of my favorite little tidbits on here, and it's not shown in the screenshot, it's actually on page 2, but it shows the best and worst year. And I use this as a little bit of a gut check. So ask yourself, can you live with how this product may have performed at its worst? And I think that's a really good way to get a handle on the product. The prospectus, on the other hand, is a legal document. It's going to go a lot deeper in terms of the fund's objectives and strategies it can use to meet these objectives. So, for example, does it use options, or does it have an ESG approach to investing? Is it hedged or unhedged? You're going to find all of this in the prospectus in great detail. And again, you can dig deeper and look at fees, fund performance. You can even look at the turnover within the portfolio as well. So lots of information in there.
Thanks, Erin. And we can reminisce on years past where we were working on this prospectus together and getting it ready for renewal. It's a massive document, especially when you're from a provider like BMO with so many ETFs. So there are a few more research tools you have available. And actually, so I'm just going to go back and make one more comment on the prospectus and ETF facts before I jump into this. Every ETF provider must publish a prospectus with the OSC and must publish their ETF facts because they're regulatory documents. So if you can't find something on their website, you can always turn to these documents. Now, a lot of ETF providers, especially those that have been in the game for a longer time, have this information laid out in an easier to read version right on their website. So that's also a place you can go. Now, research tools. So at BMO, we have so many actually, but etfmarketinsights.com, you have to check it out, our education and resource center. There's so many things posted there, reports, videos. We have a whole series of understanding ETFs episodes that you can go through and get more information. And then we have our ETF tools. So we looked at this earlier when we were comparing low volatility ETFs. That tool is also available to you on etfmarketinsights.com or just at bmoetfs.com. And here's a kind of what I was speaking to, a snapshot of what you can find on a provider's website. So at BMO, this is right on our website, very easy to find. You get all this key stats, key information for an ETF, even its objective and strategy are all laid out there for you. But not all providers have this on their website or have a large or robust website. So you always have that prospectus or ETF facts to fall back onto. Now we've saved some time for some questions. Before we get into them, I just want to say to our audience, keep sending questions in. We love hearing from you, and it also really helps us decide what to talk about week after week. We love hearing what you guys are interested in, what ETFs you're using, or just what topics you'd like more information on. So the first question that comes in is about bank ETFs. So Erin, I'm going to ask you, can you tell us what the BMO ETF is that holds all 6 banks? And how does the distribution work on that ETF?
Yes, so the ETF is the BMO Equal Weight Banks Index ETF. So the ticker is ZEB. And it pays a monthly distribution. This typically remains consistent. It's not fixed, so it can fluctuate over time, but because the banks pay such a consistent dividend and it has remained fairly consistent. It's paying 12 cents a month now. And it's going to pay out what it earns. So I think we can't argue with the fact that the banks have been consistent. So definitely a great yield product for investors.
Yeah, we just saw earnings come through on the banks and mostly positive earnings there. And I know we've talked about this in the past, but I will highlight that when all the banks increased dividends at the end of 2021, that got pushed through with the ETF, and we were able to increase that monthly distribution as well on that ETF. Saad, I have a question for you. We have a viewer looking for an ETF with exposure to esports or e-gaming, and what types of companies would fall under that? What can you tell us on this?
Yeah, so Danielle, that's a great question. As a matter of fact, we do have an ETF for this. It's the BMO's MSCI Next Gen Internet Innovation Index ETF. The ticker for that is ZINT. Now, the companies included within this ETF are, for example, just really quickly rhyming them off, NVIDIA, which is known for graphic cards for consoles and computers, Microsoft with their computer and console gaming, the Meta platforms, also known as Facebook, who are also looking to change the gaming landscape by plugging into the metaverse, etc. Capcom, makers of many popular games. In addition to these companies, there's also a whole list of semiconductor and cybersecurity companies within the portfolio that are leveraged by these esport and e-game companies. So there's definitely a good list of these companies in there. Other emerging themes that I just really wanted to shed some light on within ZINT are also cloud computing, Internet of Things, payments, e-commerce, social media. those are also additional exposures that you can get with this specific ETF. And I will round this off really quickly with an interesting fact for our viewers here. Of the nearly 5 billion global internet users, more than 3 billion average 7 hours of usage a day. That's a significant number. And this really makes online activity the second most frequent human activity after sleeping. So the economic value now lies not in computers, but in their ability to connect us, gather data, and retain our attention. And ZINT fully captures that whole theme there, and it's a part of our thematic investing megatrend ETFs. So I definitely encourage everyone to go onto our website and explore our other offerings within this category.
What an interesting stat. I don't think any of us are really that surprised though on that, because I'm sure we're all spending lots of time at home on the internet or online. But great that you highlighted that, because we have been seeing a lot of these growth stocks really sell off this year. I know we've been watching this, but it's great to highlight that that trend has not stopped. So even though these growth stocks have pulled back or cooled off, we're not seeing people online any less than we did last year. It's just a function of market dynamics that are pulling a lot of these valuations down. So thanks for taking that question for us. Our last question, it's about ESG and supporting that philosophy. Means that the investor is it going to mean that the investor will have to sacrifice returns to get exposure to ESG? Erin, we get this a lot. What do you have to say to this investor?
Yeah, we do get it a lot. And the truth is, or not the truth, but what the studies show is that incorporating ESG factors in your investment decision, considering ESG, environmental, social, and governance risks, can actually be of benefit to your long-term returns. So I think we're probably seeing this question more and more right now. I see where it's coming from, because year to date, ESG mandates have definitely been outperforming their broad market counterparts generally. And the reason for that is, of course, their lack of exposure to energy, to these highly carbon intensive fossil fuel related companies, which of course have been just about the only thing going up so far this year. So the strong energy sector performance has really hurt performance year to date. But even still, if we look at our suite of ESG ETFs that track the MSCI ESG Leaders Indexes, many of them are not far behind their broad market counterparts year to date. I was really surprised when I had a look. If we look at ESGY, which is our ESG US market exposure, it's down 12.7% year to date. But relative to ZSP, the S&P 500, that's down 11.6%. So just about a percent difference. I thought it was going to be bigger because of the lack of energy exposure. But if we look at the ESG Leaders ETFs over longer term periods, like 3, 5, 10 years, the performance is in line.
So I like how our conversation just went full circle there, because like you mentioned, a lot of investors are seeing some ESG products lag the broad market, and that's because they aren't exposed to energy. But there are some ESG ETFs, like the ones you're mentioning from BMO, that track the MSCI Leaders Index, that actually have market exposure to energy. And so investors are still getting that exposure to the energy sector to avoid that tracking error in times like this when a certain sector pops. So thanks for pointing that out, and all those great points on ESG, and just a really great example to show investors that not all ESG ETFs are created the same. Always good to research and see what they're investing in and see what their investment objectives are. Well, it's been a great show. Thanks, Erin. Thanks, Saad, for joining me today. Thanks to our viewers for letting me in and letting me guide you for the past year on ETF Market Insights. I can't wait to sit at home and watch the episodes on Fridays and have my Friday afternoons off now. Well, not really off, because I'll be taking care of a small baby. But thanks again. Next week, Erin is guiding the discussion. She is Alfred Leon. She is Andres Rincon from TD. They are going to be talking about commodity ETFs, and you don't want to miss that. So we will see you next Friday. Take care.
Thank you for watching the Market Insights webinar series. To stream any previous episode of the Market Insights webinar series, please visit www.youtube.com/ETF Market Insights. Remember to hit subscribe so you know when we post new content. Also, we invite you to visit our accompanying website for ETF tools, education, and much more at www.etfmarketinsights.com. Once again, thank you for watching. The session provided is for information purposes only. Any reference to a particular company or product is for illustrative purposes only and should not be considered as investment advice or a recommendation to buy or sell. Particular investments and/or trading strategies should be evaluated relative to the individual's investment objectives, and professional advice should be obtained with respect to any circumstance.